Coming up on Business Incorporated. Kenya tea earnings increased by 2 billion shillings on weak shilling and higher exports. And Ghana interest rates fell significantly within a week following the government's decision to reject bids with higher yields. And Fitch Solutions raises projection for Egypt's inflation in 2023 to 25.9%, up from 18.3%. Hello and welcome to the program. First off, let's look at how your money's performing at intraday. Starting with the African continent there, we see the NGX loan gainer at intraday, even though it's negative sentiment all through. NGX leading the counter, they're up 0.20%, 55,906.77 for the all-share index. Could break that 56K this week. We're looking to see how that happens there. And GSC index 1.60% down. Farther from the 80,000 level. And other markets we track, that we see Egypt down 1.43%, and Kenya still on that losing streak, down big 0.74%, 117 points, moving far away from the 120 all-share index points we are used to. On to the Middle East now. We see it's squarely mostly negative sentiment also there. Abu Dhabi, 9,759 points, down 0.70%. Dubai index, 3,339, big drop there, 1.36% to start the week. Saudi Arabia also down 0.46%. We have a loan gainer here also. Qatari index, 10,488 points, up 0.57%. So we've seen how those markets close at the end of trade today. Moving on to Europe now, we see it's a little more than a year into Russia's war in Ukraine. The global arms and weapons deal is going strong. Latest report by the Stockholm International Peace Research Institute gives an update. Let's get that now from Lars Holter right there in Berlin. So Lars, who's buying the most these days and who's selling? Talking about weapons.
Well, let's first look at who's selling. The United States is still the biggest seller of arms and weapons in the world, but its market share has increased to 40% over the past year. At the same time, Russia's market share has dropped steeply. The country has always been the second largest weapons exporter, but now is pretty much only selling to India and China, mostly, of course, because the country needs its weapons in its ongoing war in Ukraine. But Russia is still the second largest exporter, followed, by the way, by France and Germany in third and fourth place. And looking at the buyers, directly related to the war in Ukraine, of course, is the fact that NATO countries in Europe have drastically increased their spending and their imports. That's as they supply Ukraine, and they're also rushing to strengthen their own defense. And then in a whole different part of the world, you have Japan, South Korea, and Australia, who have also increased their imports, and that's as China and North Korea appear to be an ever bigger threat to stability in the region. The biggest buyers of arms and weapons, however, are India and Saudi Arabia.
And definitely the war in Ukraine must have changed Russia's position in the arms trade too. What does it look like?
Yeah, Russia, as I said, is still the second largest arms exporter in the world, as it has been consistently for the past 3 decades. But the country has used and also lost, of course, a lot of weapons in its own war against Ukraine. The war there has been going on much longer than expected. After all, Russian President Putin had called it a military special operation and was apparently expecting a quick takeover of his neighboring country. Now, as a major arms manufacturer, Russia can resupply itself to a large part, but the country also needs partners to buy from. And that's where it's been getting really interesting. Almost nobody wants to sell weapons to Russia while the country is in a war of aggression against Ukraine. There's, of course, sanctions in place. Russia's only political ally at this point who could possibly supply the country is China. And China is itself under a lot of pressure not to sell weapons to Russia. The US as well as the EU have warned China against getting involved on the wrong side of the issue here. And since China, of course, itself economically depends on its trade with the United States and the European Union, it can't easily just go against them.
And what's the impact? What's the impact they're having on the markets, and how's the industry being looked at?
Well, recent developments have certainly changed the way investors have looked at the defense sector. And one interesting example can be seen right here in Germany. That's the company Rheinmetall. It's one of two manufacturers of the Leopard tanks that are currently being delivered to Ukraine. Now, that company has seen its shares double in value over the past year, and that performance has actually led to the company's stocks being listed in the DAX, that's Germany's blue chip index. And that, of course, means that index tracking market funds have been buying the stocks. So defense shares generally are suddenly very popular again. And that's quite a change from the past few years when no one wanted to really discuss the sector much and when even ideas like ethical investment became a trend. Now it seems return on investment trumps ethical concerns.
All right, that was Lars Halter right there in Berlin. Thank you so much, Lars. All right, moving on now to London. We have Juliana standing by right there, and it's still all about Silicon Valley Bank right now. That's still what's trending. Great to have you, Juliana. So we got that news earlier about HSBC looking to buy Silicon Valley Bank, UK subsidiary, for about £1 in a government rescue deal. Are there any indications that the Bank of England will pivot on rate hikes? Because that's what everyone's projecting for the US Fed.
That is what everyone is projecting. And, we're not out of the woods just yet. And I think it's really important, Laddie, that we just make it clear there is a huge difference between SVB in America and SVB in the UK. Most people before this weekend would never have heard of Silicon Valley Bank, even though it has about 3,000 customers in the UK. But if you look at the deposits that were at stake in the UK, I think it's about £6 to £8 billion compared to the over 140 billion that had to get bailed out by the US government over the weekend. And listening to some economists, they say that this is all about SVB growing too quick, too fast, and making some really wrong decisions. And one of those decisions, when they started getting these gigantic deposits from tech companies, is where they were putting these deposits. And they decided to put these deposits into long-term government bonds. And we know that the successive rate hiking has pushed down the price of government bonds. And here in the UK, interest rates are at 4%, so it costs more to borrow. That's pushed down the bonds. So what is going to happen next week, Thursday, on the 23rd of March, when the Monetary Policy Committee meet at Threadneedle Street? Now, I think before we were expecting a 10% chance that rates would be stabilised. I think it then went to 25%. Now economists are saying that there is a 40% chance that the Bank of England just won't raise interest rates, which could be interesting because, of course, we know that interest rates have been hiked to try and bring down inflation. But then we'll see, because next week, Wednesday, we are going to get inflation figures where we expect it to have dropped from about 10.1%, which is a 40-year high, to about 9.6%. Inflation has been falling for the past 3 months. So it's a very interesting situation. So lots of people were breathing a sigh of relief, but we are not out of the woods just yet. There are lots of fears that perhaps, the banking crisis, which was triggered by the collapse of Northern Rock in 2008, could still happen again. But I think the stress test has been put in place. Joe Biden, the US president, we're expecting a statement from him anytime now about the bailout. People said, can we call it a bailout or can we not? But I think there was a retweet by the president from the Federal Reserve where within the text it did say that the US government did bail out Silicon Valley Bank. And I think the president in America is using that to say that, they were there, they did what had to be done. But in the UK, it's slightly different, a much smaller subsidiary, but still definitely important, which is why Jeremy Hunt, the Chancellor, the Treasury and the Bank of England were going around on the weekend trying to find a white saviour, and they found that in HSBC, Europe's biggest lender.
I guess it's still a wait-and-see game at this point. But how are the markets in the UK reacting to the SVB saga?
Well, the FTSE has lost all of the gains that it earned this year, and that's because the banks have all fallen. They're still very much on tenterhooks. HSBC, that emerged as a white saviour, I think they've lost about 3% of their market capital this week. Similarly, we've seen Standard Chartered fall. I think Standard Chartered is the biggest faller on the FTSE 100 this morning. They've fallen about 4.7%. We've seen similar falls on NatWest, Barclays and other lenders. So let's have a look at the numbers. The FTSE All Share is down 2.16%. The FTSE 100, that's down by 2.13%. And the FTSE 250, the domestic market, that's down by 2.33%. Now, there has been a sell-off on the US dollar, but the British pound is not faring much better. It's still trading lower against the US dollar at intraday by 0.09%, down 2 against the euro at intraday by 0.02%, and down again against the Japanese yen, but this time by far more, 1.15%.
All eyes on those currencies. But are there any sound bites about how bank customers in the UK are reacting to the SVB collapse?
Well, it was pretty concerning over the weekend because we did hear from a lot of these tech companies, 3,000, even though the deposit was quite small compared to the parent firm of over 140 billion, that £6 billion was still quite a lot to an emerging tech hub. I think the UK is only third in the world when it comes to being a tech hub, just after USA and China. And what we were hearing is that, they would have to close their doors as early as Monday at 8 a.m., that they weren't even able to buy a coffee in the morning if indeed they didn't get that bailout. And of course, we've got the budget on Wednesday, and Rishi Sunak, who at the moment is in West California, he's in San Diego trying to forge a new defense bill. He is seen as the kind of young prime minister who understands how Silicon Valley works. I believe he was at Stanford. He understands that system. He's trying to modernize the UK economy by using life sciences and technology firms as a leader. So let's just wait and see. So it is small in comparison to the US, but certainly I think Jeremy Hunt, the Chancellor, and Rishi Sunak are, keeping their fingers crossed and hoping that SVB is an outlier and won't trigger more heartache for the economy as we move forward in the year.
Anyway, still a developing story at this point. All eyes on the banks globally. Thank you so much, Juliana. Talk to you tomorrow.
Thank you. Talk tomorrow.
All right, now let's look at what's happening in Asia. We'll see Asia-Pacific markets traded mixed today as U.S. regulators announced plans to backstop both depositors and financial institutions associated with the Silicon Valley Bank, seen as a move to stem further systemic risk there. We see it's quite mixed, with the Shanghai Composite up 1.20%. The HSI, 19,695 points, up 1.95%. And we see the Kospi also in the green, up over 0.5%. But red ASX 200, that's the color, 7,108 points there. So that's what it's looking like in Asia. We'll see how the markets continue to develop tomorrow, the aftershock of the SVB. Let's move on to U.S. markets now. We'll see futures tied to the S&P 500 wavered today as traders assess a plan to backstop the deposits in failed Silicon Valley Bank there. So in the U.S., we've seen the futures tied to the Dow Jones Industrial Average. That's up about 0.1%. NASDAQ futures, that advanced 0.7%, while the DJIA down 72 points, wiping off some of those gains we saw earlier. But gains were limited as financial stocks continued. Last week's slide, bank stocks were under pressure with JP Morgan Chase and Citigroup falling. Regional banks fell even more by a 6% drop there, and that's what we see behind me there. Just NASDAQ there leading the pack, up 0.62% for the futures markets. All right, we'll take a break now. When we come back, we'll drill down on the impacts for African fintechs. That's our next conversation. Just stay with us. Welcome back. Still watching Business Incorporated live from Channels HQ. To our next conversation now, the collapse of Silicon Valley Bank in the United States may have ruffled the global venture capital market and the entire tech industry. But how will this impact African startups? That's our next conversation. Now let's talk to Chris Morris, CEO Yellow Card. Join us via Zoom. Great to have you on the show. So, what impact are we expecting from this? We know, techs and startups globally are quite nervous, at this time, and I hear it's going to impact how they're going to be able to pay their staffs this month. What are you expecting for African fintechs?
Yeah, well, look, it was a pretty wild weekend with with SVB, right? I think the short term good news is that all deposits are available as of this morning U.S. time, so nobody should have any problem making payroll or paying their staff or paying any contractors. I think the question now is, what is the longer term impact on this? And I think that short term we're not going to see much change, but I think that as we start to look out a little bit further, I think VCs and others from a U.S. perspective are going to start clamping down a little bit more. I think VC money is going to be a little bit harder to come by, and so what does that mean specifically for Africa? It means that people are going to have to work harder to get the same amount of money, right? I think as funds get clamped from a VC perspective, you have less money trying to go into the same number or more startups, and so it's going to be up to the companies to to work harder to produce more numbers to build sustainable business models, and then those companies will always find funding. And I think for some of the other companies that we've seen funded over the past several years, even from an African perspective, it'll be tough for them to find that same level of funding moving forward.
And how do you think this will impact how startups, keep their money at this time? Because I know a couple of them are already moving funds around, different banks that look quite stable. But how would this impact, custody of funds going forward?
Yeah, it's funny because within the past 6 months we've had this and FTX, and I think that this has taught us completely opposite lessons, right? When FTX happened, everybody said, crypto's not safe, and you need to, get your money off of exchanges and out of crypto and put it into the banking system. And now the 16th largest bank in the U.S. has collapsed, along with two others. And so, now it's well, is the banking system safe? Is your money safe anywhere, right? It's obviously that's hard to answer because it's not clear yet what the contagion from this is going to be, right? Markets are just starting to open in New York right now, and so we'll see what happens with like First Republic and some of these other stocks that are down 60% before markets open. But I think again, long term, I think this continues to push us in the same direction that we've been preaching, which is that long term crypto is the best and safest place to store your money. Your money is only safe when you control it, right? Outside of, keeping it on an exchange. Don't keep your money on centralized exchanges. And hey, maybe long term, don't keep your money in banks either, right? With a bank, it's really no different than FTX, right? There's more regulation, so somebody can't run off with $11 billion. But it's the same in that when you deposit your money with a bank, you're essentially making that bank a loan, right? And that bank is turning around and loaning that money out to other people, and they're putting it in mortgages, they're putting it in treasuries, they're putting it in different assets, right? And unfortunately, Silicon Valley Bank made a $91 billion mistake with their just asset risk management. And yeah, and so now we're here, right? And I think again, medium long term, crypto is going to continue to be the safest place to hold your money because there's no safer place than something that you control yourself.
So I guess the narrative with crypto, that's not your keys, not your funds. So what are we going to call the war with the banks now? Is it if the funds are not in your possession, not your funds?
Man, it's hard to say, man. I mean, as soon as you put your money with the bank, it's the bank's money in a way, right? And look, I think this does set a dangerous precedent, right? Because the U.S. government is sort of now the question is how much is the FDIC going to do? How much are U.S. taxpayers going to have to backfill? As of right now, Janet Yellen and the Treasury are saying that there's no taxpayer funds are going to be used to backfill these deposits, and it creates a question of when does a bank become too big to fail? And if certain banks are too big to fail, so like JP Morgan, Bank of America, Wells Fargo, if these guys are obviously too big to fail, then why would you keep your money anywhere else, right? Why would I, as an individual, keep my money in a small community bank when it's, it could just fail, right? I would just keep my money with JP Morgan. And it also creates a sort of a dangerous precedent for businesses, because JP Morgan, Bank of America, Wells Fargo, very well known for not accepting a lot of types of business, right? They don't take on a lot of, African fintech. They don't take on a lot of crypto companies, right? And so if you can't get a bank account with one of these banks, and these are the only banks that matter and that would potentially be backfilled, then are you out of business? What happens then, right? So I think there's a lot of questions that the Fed and the the Treasury Department need to answer around this, and we'll see what happens. But
it's a wait and see game at this point. But all eyes still on central bankers globally. Some are expecting the central bankers are going to pivot on their rate hike story this time. But what are you expecting? Because they said, the U.S. Fed said they'll keep raising rates as long as inflation stays elevated, at this time. But what are you expecting for rate hikes?
Yeah, well, they haven't done anything with inflation yet. So I don't know. Treasuries are paying out, 5% right now? I don't know how much higher they can get it. So, hey, look, we'll see. It seems unsustainable. Obviously, you cannot just raise interest rates to infinity. But I think, I think that right now the dollar and the U.S. more broadly is paying for the mistakes that it made during COVID, right? When it printed trillions of dollars out of thin air and circulated those into the economy because they didn't want the economy to collapse during COVID, right? You got to pay the piper eventually, so to speak, right? And so I think that's what's happening now. I'm not sure how much the government can actually do to avoid sort of a market downturn here. Or to avoid inflation, but we'll see. They're going to keep trying, and
I guess the battle rages on against inflation at this point, and protecting the banking system and financial
never stops, my
markets.
Brother.
Never stops. Thank you so much, Chris Morris,
Thank
CEO, Yellow Card. Thank you so much. All right, there we're talking as a VB there now. Moving on to other conversations. See, Ghana interest rates fell significantly within just a week following the government's decision to reject bids with higher yields. According to the latest auction by the Bank of Ghana, the 91-day yield fell once again to 19.04% from 24.16% last week, from a high of 35% a week ago. Interest rates on the short-term securities dipped significantly on the yield curve, whilst the 91-day bill yield has fallen 16%. The 182-day bill is plunged by about 13%, going for 22.84%. The 364-day bill has also dropped by about 9% to 26.82%. That was on Friday, March 10th, 2023. And Fitch Solutions raised its projection for Egypt's inflation in 2023 to 25.9%, up from 18.3% projected in February. According to its updated report on the MENA monthly outlook, Egypt's annual headline inflation surged in February, reaching 31.9%. It's a notable increase from 10% in February 2022 and 26.5% the previous month. That's according to the Central Agency for Public Mobilization and Statistics, that's CAPMAS. The calculation of the Central Bank of Egypt also showed that Egypt's annual core inflation rate significantly accelerated to 40.3% in February, up from 31% in January 2023. All right, those are the top stories on the African continent today, and that's how your money performed at Intraday. Thank you so much for watching. I'll catch you again tomorrow. I'm Ladi Williams. Bye for now.